Hello and welcome to today's video. We're going to discuss whether or not the artificial intelligence bull market mania has worked its way through the system and where the stock market is now rotating into other areas. We actually have three different sectors where we found some pretty good setups heading into this week, the end of November, heading into December, maybe even into the end of the year. We actually have three stocks that are in the same industry group that one reported 2 weeks ago had a big move to the downside, rocketed back higher. And now two other leading stocks in that same industry groups are reporting this week. This could set up a really monstrous reward potential if the other two stocks report similar to what the other one did and rallied back up. So we got a lot going on. We're going to talk about Nvidia as well. Has Nvidia perfectly priced itself somewhere between this 475 and 500 level? If you traded through the dot-com boom way back in a whole other lifetime for a lot of us, you'll see that there's a lot of similarities where all of the excitement took over roughly 12 months, maybe even a little bit shorter period of time than that. And then after all of that mania came in and pushed those stocks higher, ridiculous levels without any valuations, the reality set in and everybody started sitting around having a cup of coffee and saying, are any of these companies actually making money? Now, obviously, Nvidia and a lot of these semiconductor stocks are making money. That's not a question. What is a question is whether or not they can sustain the levels that they're at right now. In other words, does the current stock price justify the potential? Now, I think everybody kind of agrees that the potential is all kind of built into that right now. That's where we are. The question is, where do we go from here? So what you've probably heard quite a bit over the last week or so, and we talked about this last Monday, where we said that it was priced to perfection. And essentially what that means is all of the information that is out on Wall Street right now is in the stock price. So what Nvidia and a lot of these other artificial intelligence stocks are looking for right now is a new catalyst. Now, even the Sam Altman saga that unfolded last week, we're going to take a look at that in a second. Did that show cracks in the amazing story of 2023, which is obviously artificial intelligence stocks and everything around that? Or is that just the start of something new? And if you read a lot of stuff in the Wall Street Journal and whatnot this weekend, Microsoft has a huge stake in OpenAI. They have a 49% stake, but they don't have a board seat, which is crazy. Bill Gates was talking about, why didn't we just buy this company? Whether that's a mistake or not, who knows? I know he kind of pulled back on that a little bit. We have a lot we're going to talk about today because we're going to kind of work our way away from specifically looking at technology stocks, even though technology stocks have the biggest list of stacked order flow by quite a bit. That's not the question. Very similar to a financial stock we're going to take a look at today is not whether it fits the scan, but whether or not it's a good trading opportunity. That's, again, we talk a lot about, write that stuff down. Take a Post-it pad out and say, just because it meets the scan criteria doesn't mean it's a good trade. We're going to wrap our head around that today as well. So I'm really jazzed up. Hopefully you are too. Stick around. Be back in just 1 second. Okay, so obviously everything we speak about here is for educational purposes. It's my mission to help you make better trading decisions, and that's really what we're here for. So we're going to kind of work our way over. We're going to start out with where we kind of finished up last week, actually, and with the Nvidia and whether or not it was overpriced. We're going to kind of build all that into the argument, and we're going to work our way over into some other ideas. So whether or not it was earnings, whether or not it was China, really doesn't make a difference. If you go back to reminiscences of a stock operator, Jesse Livermore talked about this. The news always comes out after the fact, and what's kind of interesting about this, if you understand classic technical analysis, however you want to read it, we kind of keep things simple, but you do want to go back to the basics of before all this computerized trading where you can get everything in a heartbeat. There's two very simple chart patterns that everybody needs to know, and it's accumulation or distribution. Accumulation is generally after a down move where then a stock will go sideways and kind of sit in a box. Heavy volume happens during that box, and eventually institutions need to step up and start to pay higher prices because the selling stopped simply because it stopped going down because the institutions are holding it. Once that ends, you usually see what we call an uptrend. We kind of work our way into calling that stacked order flow. So we have a visual of seeing when the institutions are buying, which stocks they're buying, which sectors they're buying, how long they've been buying them. So we kind of pull back a little bit and get away from just saying uptrend or downtrend, because I want you to visualize there's real money being spent to create that. And we want to go deeper. A lot of the stuff that we talk about in our coaching calls, it's built around the fact that you probably don't need to learn more, but what you actually need to do is to learn how to use it. That's a really, really big difference. So the same chart you're looking at right now just need to make more distinctions. So if we kind of take that and bring that into Nvidia stock and kind of work our way through that, there's two different, really amazing different price actions going on over here. And, wherever you might have learned this before, you can actually see where there's a really, really organized, for lack of a better way of putting it, trading range. And these kind of quiet ones we discussed over here. So I want to walk you through the way that I kind of broke this down. And what's really important about this is, while I'm walking through this, if you want, you can take screenshots, because I want you to have this training to understand the difference between just saying you're a chart reader and saying that you're a trader who is actually looking for the money, where the money's being spent, how long the money's being spent. Has that changed? And we might be seeing that in technology stocks right now, which is why we're going to uncover a couple of other different sectors that actually have some pretty good reward opportunities based on the risk that we would need to be looking at. So remember, we're going to talk about this in a couple of seconds, but we have, is it probable? That's the first part. And then the second two parts are risk and reward. Now, a lot of people just kind of throw out risk reward numbers and be like, yeah, I want to make 3 compared to the 1. And that sounds fantastic. But what a lot of trading strategies don't do, and what a lot of traders kind of miss the step on, is what are the odds of 3 being reached for a reward versus the odds of 1 for the risk. And that's kind of what we're going to break down now, because you're going to see that in a lot of tech stocks, where I'm not saying they're going to go down in a big way or start a bearish price action. What I am saying is the probability of follow through has diminished until something new comes out in that area, specifically AI. Okay, so let's kind of break down what we mean by this, because we want to give you a thought process on heading into the day and heading into the market. Okay, everything about the stock market is expectations, and you probably know this, right? And if you've never attended one of our game plan meetings in the morning, we spend a massive amount of time talking about news and earnings and all those kinds of things, right? And all of those are built around what was expected. Here's the earnings, what was expected, right? Here's the earnings per share, what was expected, right? Here's the guidance or the outlook, which is what's expected going forward, right? So all of the analysts and everybody, all these research departments put their best bet out there on what's expected, and then the company reports the actual numbers. The market reacts based on what was expected and based on what happened. Now, that's a big thing that we need to keep in our mind right now. If you're thinking like an institution and you want to learn to shadow institutions, we need to start to think, what is the upside from here? That's the big thing. What is the upside from here? And what kind of risk is the right risk for the amount of upside that we think is likely? Now, what I'm trying to get across here is the likely next move in a lot of these semiconductor and AI stocks need a fresh story. That's the thing that we want to keep in our minds right now and write down in our tracking journal. Okay. Oh, by the way, I just wanted to, we had the 3-day challenge a couple of weeks ago, and I know everybody here, we actually probably have a bunch of people here who attended that. Probably the biggest thing that we did on that was the custom coaching session, where everybody got to ask 2 questions that are their biggest roadblocks. And I got to be honest with you, when you have custom help dedicated to where your unique situation is, that's kind of where I light up. And you see me kind of do these on these YouTube channels because I know I could make a big impact. So what we've decided to do, what I've decided to do for today, for Black Monday, which is another promotional day for everybody, we're going to be opening up a second custom coaching call this coming Wednesday night. Now, here's the big thing I want to walk you through, because what we're talking about right now is a lot of what we're going to talk about on those coaching sessions. But here's really the bigger thing. And this is really where the success for you usually stems from. Now, a lot of people think that, give me the secret sauce to whatever the strategy is, right? But when you start to advance a little bit further in your trading career, you start to learn that reducing mistakes actually get you closer to profitability quicker. And then having a strategy for managing winning trades is what kind of puts you over the top and you kind of feel like you belong. So these are generally the top questions that we have on the coaching call. Edge, setups, position sizing. That's a really, really big one, which is recognizing market conditions and that kind of stuff. So if you didn't happen to attend the challenge that we did a couple of weeks ago, this coaching session that we're having on Wednesday night is going to be dedicated to those of you that want to join me on Wednesday and have me personally, not one of my team, me personally, spend as much time as possible on your two biggest roadblocks. What are the two biggest things that are holding you back in trading right now? And they should be obvious. It shouldn't be like a big laundry list of things. There's got to be a couple of things that are holding you back right now that if you just finally understood that will kind of take you to the other side and you'll start to feel like you belong, feel like you could make money, wake up every day expecting to make money, maybe not make it every day, but expecting to, not because the market did you a favor, but because you know what you're doing at that point. So think about this. What are the roadblocks? If you could change that roadblock right now, two big things, what would that be for you personally? And if you want my help in overcoming that, click that link down in the description and come and join me on Wednesday night at 6 o'clock. I would absolutely love to see you there. Everybody who joins me on Wednesday will actually have the replay of the video to download. So you'll actually have lifetime access to your personal coaching and all of the other ones that I answer on that call as well. So make sure you click that link if you'd like to join me on Wednesday. I'd love to see you. If you've been in our coaching calls, you know how much I light up during calls because I really like to make a difference. So if you feel like there's something I can help you with, definitely make sure you join us on Wednesday. All right. So working our way through what's going on with AI. Obviously, Sam Altman got fired, came back, Microsoft got involved, all that kind of stuff, right? But what does that mean for a trade, right? Everything we're talking about has to relate back to, but what does that mean for a trading opportunity? Okay. So if we kind of work our way through that, everything is about expectations, as we just talked about in the stock market. The 4-week rocket reversal faces profit taking as Nvidia earnings didn't so much disappoint. Nvidia earnings were actually still pretty good, as much as they underwhelmed the expectation. Yep, that's right, John. 6 p.m. Eastern on Wednesday night. Thank you for that. So the QQQ broke new 2023 highs, right? So we got to take a look at that. We want to put all of this into the equation, right? We popped through there and made new 2023 highs. You can see where we are for the year. So by the way, what I want to get across to everybody here, this is a really big part of trading. When you start to have a process for determining what does the market look like, where is the obvious opportunity? Is there an obvious opportunity? That's kind of the stuff that I walk through when I do this for everybody every day. I want you to get inside of my mind so I can help you get to the point where, and this is a really big thing that came out of last week's coaching call. We had somebody on the call last week who was talking about every time I get into a trade, it either moves in my favor a little or moves against me, but never just has one of those ideas that moves in my favor. And I'm having trouble managing those ideas. And this person thought that their trouble was managing those trades where it was a little bit in their favor or a little bit against them. And that really wasn't the problem. That was a symptom of the problem. The real problem is better stock selection and setting up better ideas. So a lot of the times what you think is the real problem is not the real problem. It's a symptom of the real one. And in this case here was picking better ideas. So as I'm walking through this in the daily ticker here, I want you to be thinking to yourself, do you have a process to set up the highest probability ideas? And quite frankly, this is another one. Does that process also tell you when there's nothing to do and you should be kind of pulling it back and keeping your money close to your pocket and not taking it out because either the probability is lower, the market's just a mess, or maybe you should just be trading for cash flow and that's it. Understanding and making those distinctions are a big part of the coaching calls because it's the same charts. You're just learning to notice more. And I'm going to show you that right now in Nvidia because this is a really important distinction. Okay. All right. There's two things to consider here, and specifically talking about Nvidia. One is the obvious distribution on the chart. Stocks that prepare to go higher generally form a tight trading range. And I want to explain why. Remember, we keep going back to thinking like an institution, paying attention to what's going on behind the scenes, not just chart patterns. Why is that chart pattern happening? Okay. Stocks that show a change in order flow see wild, large trading ranges that give investors hope. Now, how do those wide trading ranges like this give investors hope versus these tiny little consolidations? Hope in the sense that you buy the decline, you watch the stock rally only to see a new decline, which is what we see here, right? Wild price action compared to this. Now, think about what happened after the fact here compared to what's going on here. Generally speaking, tighter ranges lead to continuation. Wider, sloppy ranges are changing hands where it's going from smart money to less smart money who are not recognizing what's going on. So I'd strongly encourage you printing out a chart of Nvidia for 2023 right now, because it's a classic chart of tight consolidations that follow through and a wild, whippy consolidation that generally marks a change in order flow. At the very, very least, it says that there's nothing new that's obvious. Okay, that's very important because this is going to relate to whether or not we're buying these new highs. Okay, the first 2 hours on the chart show consolidation and tight moves. The second shows a 6-month trading range that's as wide as $100. And again, if you haven't read Reminiscences of a Stock Operator by Edwin LaFay, Reminiscences of a Stock Operator, if you've never read that before, it is a must read by anybody who's in the market. And Jesse Livermore discussed this, I believe it was 1927, if I'm not mistaken, when the book came out. So almost 100 years ago, the same type of price action we can participate in, because price, whether or not it's done by an algo or not, is still programmed by people, and people have the same reaction to what's going on. Okay, so let's continue to work our way through and set up some ideas for today. You need to think like an institution. So let's just say, for argument's sake, let's say that John Bates has 10 million shares to buy or 10 million shares to sell. If he's looking to buy it, he's going to be doing it quietly without attracting attention. But when he needs to get rid of it, there's a whole different price action where it's going to be brought up and then his buying diminishes. It's going to be brought up and then his buying diminishes. It's going to be brought up and the buying slows down again. Okay, you got to think that way through it as if you're an institution. If you wanted or needed more stock to buy, would you be quiet or loud? Would you be announcing to everybody that you need to buy 10 million shares? You'd be quiet, of course. You can grab more shares at a decent level. And if you are really advanced and you got all this stuff locked in, as close to VWAP or anchored VWAP as possible. That's another big thing in trading. If you were selling, you'd be loud to attract interest. You want to take a snapshot of that. That is really, really important lesson right there. And this is probably a perfect chart for it. We actually do have a couple of stocks on the other side of the market that kind of went through something similar, but on the other side, where you have bearish order flow that then goes into a trading range where you can actually see the selling stopped. And then these guys who were buying that stopped it had to now start paying higher prices. So good visual on both sides of the market there. Definitely stuff that you should print out. Okay. All right. That's how order flow works. Quiet to accumulate, loud for distribution. You want to write that down. The price action is as old as Wall Street. And again, documented very clearly almost 100 years ago in this book. The second reason is valuation. Now we're going to get a little bit more specific into why would we invest in this stock thinking that there's going to be future cash flows, right? Early 2023, AI mania took over and investors were rewarded with insane gains. If you remember SMCI, the stock went from 90 to what the heck was it? Hit the earnings report here, 104 to 356 in one earnings season. So some of these gains were just absolutely amazing. Thank goodness for them. But now we need a new catalyst. So the catalyst has kind of worn itself out. And you can kind of see that's not a very, look how tight that was before the next move. Look how tight that was before the next move. And look at the choppiness that's going on right now. There's a lot of churning without advancing. That's something you got to keep in mind. All right. And this is very easy to spot. You just need to know what to look for, right? So similar to the dot-com bubble, those same companies must prove they can monetize the new technology. If you remember now, they're all sitting back and saying, okay, this is fantastic. Made some great fast money. Everything exploded. Now these companies, besides Nvidia, need to show that there is a use for it. Now, if you haven't been using ChatGPT or any of those kinds of things right now, peeking behind the curtain, A lot of them are built for businesses and, quite frankly, probably students, because a lot of the top AI stuff is now mostly research driven, where you can kind of get that research consolidated in one spot instead of doing a search and it finds like a million different links for you to click through and then go and find the information. By the way, there is one good site that I use quite a bit. It's called perplexity.ai. Maybe I'll do a how to use AI for stock trading at some point in the future. But if you want a really cool one, you can actually go to perplexity.ai and you can actually choose where you want it to search. So you can choose research reports, you can choose Wikipedia, you can choose Reddit, which is actually a really big one because you can go into Reddit and then read those conversations to see how people are getting over that challenge or accomplishing that goal. So perplexity.ai is a pretty interesting one. Okay. All right. So the recent chaos at OpenAI, where Sam Altman got fired, rehired, Microsoft got involved, all that kind of stuff, shows there's a scramble for results that aren't there yet. The board kicked him out. Why would they kick him out? They have almost a $90 billion valuation. They're scrambling for a new catalyst. Remember this. You got to read between the lines here. All right. So Nvidia can make all the chips they want. If there's no commercial use for the technology, it's going to stagnate the AI winners until a new catalyst unfolds. So I want to be clear about this. I am not saying AI is done. What I am saying very clearly, because this is mimicking what happened in 1999 into 2000, is the mania has unfolded, played itself out. Now we actually have to get to the point, where are the companies that are actually going to make money besides the people that are building the chips? That's where the further growth is going to come from. So again, you want to write that down in your tracking journal. What will be the next thing I need to watch for AI? That's what happened. Now, obviously, we want to set up some ideas for this week with sector rotation and some other hotter areas that are still at or near an optimal entry. So that's what we're going to talk about now. Okay. All right. So the laggard of the three majors, again, if we kind of zoom our way out to the three majors, we're obviously talking about the SPY. We're also talking about the QQQ, obviously. And we are also talking about the diamonds. You can actually see that the Dow has been lagging, but kind of juicing it up a little bit lately because of some very specific sectors within the Dow. Tony, you're actually in our mastery program, so that's actually a very good question for you to ask on tonight's coaching call. Tonight's coaching call is at 6 o'clock. Okay, so why, right? Why the Dow right now, and why the Dow at this particular moment? All right, so let's kind of work our way through that. Technology still shows the largest number of stocks with stacked order flow. So if we kind of go into our research document and we take a look at the larger list, you can see technology is still at the top of that list. Consumer cyclicals hanging in there, but what we're noticing now, industrials, healthcare, and financials. That's where we're starting to lean into now, because if the reward potential on technology has diminished, even though they're still obvious, we're now looking for new opportunities that have expanded reward potential for the next trade. So I want to make a distinction there. Still obvious, but not necessarily good risk reward. New obvious with better risk reward. That's what we're talking about. Now, what I want to be very clear is what I just showed you is how I walk through this when I'm setting up trades and setting up scenarios, is where is the money flowing and which of those stocks are still at or near optimal entries that have reward potential. So what we're talking about here, and this is very important, you want to write this part down too, is most people mistakenly look to chart patterns for answers. That is why you struggle, because that's why you don't have conviction. If you are looking to have conviction, you are looking for clues. You are not looking for answers. And the reason I say that is because when you look at a chart, you're like, yes, that's the answer. That is the one thing I was looking for, and that's why I'm going to make money. You don't have enough reasons in the trade. You don't have enough clues in the trade to say, wow, I now have 6 different clues that tell me I like this idea versus just that one bull flag or whatever it happens to be, right? So just think about that the next time you're looking at your charts. You're looking for clues. You're not looking for answers. And when you do it that way, you are now set up based on clues. You're now falling back to what's probably going to happen, not what's definitely going to happen. And this is a really big lesson for those of you that have been struggling. And again, if you're struggling, I really hope you come and join me on Wednesday night, because this is the kind of stuff that we do on the coaching call, but it's specific to you. Too many people believe that chart patterns and technical analysis and indicators and all those kinds of things are to predict the future. That is wrong. That is 100% wrong. Our job as traders is to take a look at everything that's going on, say what is happening, and how do I know when it changes? That's trading. You want to write that down. That's a big difference from this pattern's predicting the future. That's a very, very big difference. And that's why a lot of people take big losses, because they think that the pattern should have predicted. And then when it doesn't work, they sit on a losing trade because they predicted instead of just paid attention. So if you got a lot of gray hair like I do, and the market is driving you batty, think about these things that we've discovered over the years. It's a lot easier and quicker to be confident and get closer to making money in the markets when you simply pay attention and look for clues, as opposed to thinking you need to see the future. It's a lot easier, trust me. Okay, so let's continue with some of the ideas. So we also have consumer cyclical, we have industrials, healthcare, and financial. So we want to start to work our way through some of those areas to look for new opportunities. So this is the part that you want to screenshot. So we got financials, we have healthcare, and these are the top 5 stocks in the sector over the last week or so. And then we also have financial, healthcare, and obviously consumer cyclical at the top of that list as well, right? So if we kind of work our way down, what does that actually mean for stocks? And this is actually the most important part that I wanted to get across today. PANW, right, in this software infrastructure groups. Now, again, this is where we're looking for clues. We're not necessarily looking for answers. We're looking for clues. Where should we start to pay attention? PANW reported and got clobbered. After earnings came out, buyers stepped in at the previous support level and now rocketed this thing higher, right back up to where it was prior. That's one clue. Next clue is we now have ZS reporting today, scheduled to report today, and CRWD reporting today. So if we kind of work our way through the S&P 500 and start to look for where are these stocks here, what other stocks could I be paying attention to? So are there clues that money is paying attention there? Obviously, Microsoft is a rocket ship right now. Oracle has had just an amazing 4 to 6 weeks as well, coming off the bottom and actually pausing. We also have PANW, we have CRWD, and we have Zscaler, all doing the same thing. So what does that mean? Institutions have their attention right now. Now, earnings are coming out. We saw that PANW had a big move to the downside and clawed your way back. So now we have a choice. Are we going to trade into those earnings? Meaning me, I have my choice. My choice is, do I trade through those earnings? Well, the last time that one of these bigger stocks had earnings, it had a big move down, even though it rallied back up. 2 other stocks at the same time are all about to report earnings, also right at breakout levels. So what we have set up here is a really good reward potential, but a challenging risk because of the fact that the last one reported and had that big gap down. So what I'm looking for in that group of stocks this week, I'm looking to be a little bit more conservative. I'm waiting for the earnings on those second 2 stocks, ZS and CRWD, to come out. And then I'm going to make an assessment on risk reward on that industry group that is all right around a new breakout level. So these are ideas going into the week that I'm saying, okay, if this happens and this happens based on what happened on the previous earnings, this could be a fantastic idea with all that money going in at the same time. But that's after earnings, right? We still need to have some ideas heading into the week. So I want to put my capital to work at the beginning of the week. So we just talked about financials. We talked about healthcare. We talked about consumer cyclical. We talked about technology, right? So that means now we're going to work our way through some of those other ideas that also had something new. Now, Coin is a little bit different. If everybody knows what happened to Coin and Binance, Coin, we actually had a couple of different entries in Coin. We actually mapped out, again, you can see the pullback into a consolidation finally breaking out here at 86, and behind the scenes in the community, we kept talking about 86, 86, 86. But then the stock rallied, paused, rallied, paused, rallied, paused, and now that big fine that came to Binance last week rocketed this stock higher and broke out. So now this is another interesting scenario here. Coin is obvious, had good news for their company when one of their competitors had bad news. It is what it is. Whether you love Binance or not, it doesn't matter. But now the stock is actually well beyond 3 different entries. So coin had a good catalyst that made it move higher on Friday, Thursday, Wednesday, and Friday. But now it is too far from the optimal entry. So coin is another idea in financials that's set up where it's obvious, but too far from the optimal entry. So now we got to maybe, if we want to get involved in the coin, because it's too far from the optimal entry, and the optimal entry is very easy to understand. If this is what a stock normally does, if it's already done 2/3 of what it normally does, you're too far from the optimal place to buy it. So if you choose to buy it beyond the optimal entry, that means that has to change how much you're looking to put into the deal, because the reward potential has shrank for maybe the same risk. So remember this, and this is another thing you want to write down. When you learn to recognize these things, and remember, this is the stuff we talk about on coaching. When you take break-even trades, in other words, you're risking $5 to make $5, which would be the next likely move. That makes you a break-even trader. Break-even trades make break-even traders. When you learn to notice more and you learn to notice ideas that have better reward potential, that's where you think you have other problems of getting stopped out, but it's really stock selection. So now we're going to move our way over from coin, and why coin is kind of extended into other stocks in the financial sector that have a little bit better optimal entry and have justifiable reward potential. I know that's a mouthful, right? It's stocks that are obvious that still have good profit potential. That's what I want to get across, right? So if you happen to be watching this video on the replay or whatnot, you can always just take a screenshot of these ideas, because I want to read them off for you now. Okay. Okay. So other stocks in the same group as these guys. So you want to start to build that argument for ideas, right? Financial sector marched higher by JPM over the last 4 weeks. And another very similar idea where we do have obvious. We do have a pause, but there's only $5 left until this next major resistance. So this is a trade where maybe you're looking to risk 3 to make 5. That doesn't make sense either. But the sector is getting attention. So what we need to do now in the sector is start to look for ideas that have paused and have reward potential. So AXP happens to be one of the ideas that I'm watching this week. Okay. Capital One, Discover Financial, also showing some new support levels that they're looking to break through. Last week, we talked about asset management companies in financials. KKR and BX top the list, and we also have JXN sitting right in front of all-time highs. So you can actually see here what we're trying to do right now is we are not so much saying technology's bad. We're not saying that. What we're saying is, as of right now, it looks like technology reward potential has gotten a little bit smaller. So now we've kind of shifted to other areas of the market to say, where are they not overextended? Where do they still have room to go, profit potential, and which of those have paused, allowing us to manage risk? So remember, it's 3 parts: probability, risk, and reward. Far too many people only use 1 out of 3 when it's really all 3 of those that kind of create the perfect stool for a really good trade. You need all 3 legs to hold that stool up. All right. And think about it. If you have that problem of every time you get in, it kind of goes up, goes down, goes up, goes down, you probably managed the risk and you said, I know where I'm getting out, but you didn't go deep enough to say, what are the odds of it actually hitting my 3? So 3 for reward, 1 for risk, right? So that's kind of like the deeper parts of reading the charts. So let's continue our way through here and talk about some of the other ideas. So obviously we talked about financials here, and then we're going to work our way a little bit more into healthcare. Healthcare shows several industry groups worth watching to start this week. Diagnostic research shows 4 stocks with recent bullish attention. Agilent topping the list, and I have an alert. So you want to set this alert. Agilent over 130 is the area that I'm looking for. Healthcare facilities show 3 stocks with recent rallies, and we just talked about this bearish order flow into accumulation, breaking out of that accumulation. And again, remember how I said putting the clues together? How many reasons can you decide to want to look at something? Well, look at this. It was in accumulation for a while, but here's what happened. Bullish gap by another bullish gap, and now has traded into a pause. That's pretty interesting, right? So you got 3 reasons right there to consider looking at it. Medical devices company DXC CM continues to stair step higher. Look at that beautiful move. Again, something that should really be interesting to you right now is the fact I don't have any indicators on my charts. What does that tell you about how easier it can be to read price action when you're literally reading the price action? Now, obviously, you're going to add volume in there, maybe VWAP if you're short-term trading, anchored VWAP if you're doing that on your swing trades. But it really comes down to price action and volume. And what do I see institutions doing? Are what they're doing still valid? And how do I know if it changed? That's a big thing to write down. We actually had somebody last week on a coaching call as well say, how do I know when it changed? Well, the only way to have that question of how do I know when the trend changed is you need to be clear which trend you're trading. If you can't answer the question, is it still valid or has it changed? That means that you need to go back to the drawing board and say, which trend am I actually trading? Once you get clear on the trend, then you could work to the next steps of the proper risk, how long order flow has been stacked. How do you know if order flow is still valid? How do you know if order flow is changing? Once you're clear on which order flow you're trading, then it becomes very easy to say, well, everybody in front of me is stepping on the gas, so I am too, and nothing has changed. And then a mile or two down the road, 3 weeks from now in the stock market, maybe all of a sudden you're seeing red lights on you and you're seeing bigger red candles, even though it's going up. Maybe you see a big green candle followed by 2 big red candles. The tape has changed. None of that has to do with any indicator. No stochastics, no MACD, no moving average crossover, none of it. We're simply reading what's going on in the chart, knowing what should happen and knowing whether or not it's still there or if it's not. Then we get down to the last part, which is determining where a good entry is that justifies the next likely profit potential. So if you're finding yourself struggling in the markets right now, what we just mapped out from start to finish was what's going on in the 3 indices, which sectors still have the most obvious order flow. In other words, how long can we see they've been buying a particular group of stocks? Is it still valid? Is there still reward potential? Technology stocks have a little bit less reward potential until something changes, something new, a new bullish catalyst, which means then we start to work our way deeper and over into our research, taking a look at some other ideas. So when I post this at night, we obviously always start here. We want to know what the last 4 weeks were like so we can get an idea of was there good money on the table. And you can see last week a little bit cooler, right? Not as much obvious, but over the longer period of time, we have consumer cyclical and real estate. How about that one popping in there? And technology. So this is the way that you go into each day, each week, each month. And again, I don't care if you're placing 1 trade a month, spend that extra 10 minutes of saying what's going on. Is it still valid and how has it changed? Do I need to make any decisions to my profitable trades? Are there any new ideas I might consider allocating capital to? And how much do I love those ideas? Those are the kinds of things that I'm hopefully getting across to everybody on these live streams on Monday, is that trading is a lot easier when you have a process. But the biggest thing about a process is it has to make sense to you. And I hopefully am walking you through the steps of how things kind of work behind the scenes with institutions, and then how we can spot that in price action and volume in order to feel conviction when we're looking to buy new stocks. If they have good risk, is there sufficient reward? That's really what it comes down to. All right. Order flow stacking is how long has that been happening? So if we kind of take a look at the map again and break that down, you can actually see this is over 1 week. Something else that's super interesting here are the Magnificent Seven stocks have kind of cooled off a little bit, and that's going to be something interesting to watch as well. If you watched our video from last week, we mentioned the Magnificent Seven and said that it's amazing that they're carrying the market higher, but market breadth was a little bit weak. So in other words, just those 7 stocks were really strong in carrying everything higher. And you probably don't need to go further than Apple and Microsoft to really get some validation on that, where Apple really hasn't paused at all, other than maybe the last couple of days, and Microsoft, same thing. So these smaller groups of stocks, large cap stocks, kind of carrying the entire market. The one thing that we did say to everybody to pay attention to is whether or not other areas of the market were going to kind of step in and take over and carry the market as a bigger group as opposed to that smaller list. And that's kind of what we're looking for right now. Industrials, healthcare, and financials specifically looking to join technology and consumer cyclical towards the end of the year. So that's how we're kind of mapping everything out this week. I just gave you a big list of ideas that I'm watching Monday heading into the week. We're going to watch those earnings unfold from Zscaler and from CrowdStrike. Both of those coming out are scheduled to come out today and tomorrow, and see if they stay up near those levels right where PANW is, and we get some follow through. If we do get follow through, great. We'll look for new entries. If we don't get follow through, we'll work our way over to financials. American Express is one of those that I'm looking at to start the week as well. All right. Hopefully we did a good job for you today, everybody, and set you up for the week, showed you a little bit more on how to do game planning. If you'd like to join me on that coaching session on Wednesday, click that link below in the description. I would absolutely love to see you there. Remember, I'm giving you custom help based on your unique circumstance. So really think through what's holding you back right now. What are your biggest challenges? All right. If we did a good job, also do me a favor, give us a thumbs up, hit that subscribe button, and I will speak to you soon. Thanks so much, everybody. Have an awesome, awesome week. Awesome finish to November. We're heading into the last month of the year. That is crazy how fast that went. Take care now.